Welcome, everybody, to our joint Unanet and BDO Thought Leadership webcast. Today's topic is Getting the Scoop on the Incurred Cost Submission. My name is Kim Koster, and I'm the VP of Corporate Strategy for Unanet, and today I'll be your hostess for the webinar. Let me go through a couple of quick housekeeping items. Within 48 hours, you're going to receive the presentation and the recording. And we welcome your Q&A. Put it in the console, any question that you might have, and we're going to respond directly back to you individually through email. Just a quick reminder, this webcast is an hour and 15 minutes, and we just have a lot of great content for you today. So today's session is designed to help you understand your upcoming incurred cost submission. And our guest speaker is going to provide an introduction to the ICS submission, preparation techniques and best practices, and common mistakes that can lead to scrutiny from DCAA. In addition, she's going to provide an update on the most recent DCAA audit trends. So with that, let me introduce Tetiana Gervis from BDO. She's a senior associate in the Industry Specialty Services for BDO. Her experience with government contractors and nonprofit organizations includes helping clients comply with the FAR and CAS standards, as well as conducting efficiency and organizational reviews. Specifically, Tetiana has assisted clients with the incurred cost proposal preparation for both current and prior years' resubmission and provided support during DCAA ICP audits. Tetiana has experience with disclosure statement preparation and modeling indirect rate structures for compliance and competitive consideration in both modified and full CAS coverage environments. In addition, she worked with government contractors and international nonprofit organizations to help with business system reviews and financial analysis, as well as help develop accounting and financial policies and procedures to meet business and compliance needs. She holds a degree in accounting and finance from George Mason University, and she is also a CPA. And Tetiana is actively working on her Unanet certification, and she's assisted with Unanet implementation engagements. So without further ado, I'm going to turn over the webcast to Tetiana to talk to us about the incurred cost submissions.
Thank you very much, Kim. This is Tetiana Gervis. Thank you so much for everybody for joining. We have an exciting webinar today on incurred cost submissions. So we'll go ahead and get started. The topics that we are going to cover today, we'll go through the background information for an ICS. We'll go through timeline and submission details, as well as preparation techniques and best practices. We'll also look into some of the current ICS audit trends. So what is an incurred cost submission? You might know it as an incurred cost proposal. Some people call it ICP, ICRP. Some people also refer to it as ICE, which is the model that DCAA provides for ICS. Whatever you used to call it, I will just refer to an ICS, and we'll just use that interchangeably. So the purpose of the ICS is to establish the final annual indirect cost rates and determine any over and under billing on the government contracts. The submission includes the direct and indirect expenses incurred by the contractor during the fiscal year. ICS schedules show the detailed calculations of indirect pools and bases and the summary costs incurred by contract. And other supporting schedules also provide the detail for those costs. It also includes the certification of final indirect costs. That's something that's signed by your CFO or somebody higher about in the company, just to certify that all the information provided is correct. And rates developed from the submission are used for a variety of purposes, typically as a source or a starting point for calculations such as provisional rates or forward pricing rates. Where does the requirement for an ICS comes from? So FAR 52.216-7, which is allowable costs and payments, actually requires government contractors to submit an adequate final indirect cost rate proposal to the contracting officer or the cognizant federal agency. And the timing for that is within 6 months period following the expiration of each of its fiscal years. So if you follow in the calendar year and your deadline would be June 30th, and that's when we see a lot of ICS traffic. So May and June, contractors are working on finalizing their ICSs. So the reasonable extension may be requested from contracting officer. If you don't think you can submit it in time, please go ahead and submit the extension. The proposed rates shall be based on the contractor's actual experience, actual cost experience for that period. And the allowable cost and payment clause applies to cost reimbursable types and T&M contracts only. So if you only have fixed price contracts, you do not need to submit one. And all federal contracts should be included and reported individually on the ICS. It is permissible to lump up a group of commercial contracts of fixed price work together, but all flexible price contracts have to be broken down separately, and the total ICS has to reconcile to the trial balance. For subcontractors, if you only have subcontracts, sometimes we get the questions, do we still need to prepare an ICS? And the answer here is just look through your subcontract agreement and see if you have the allowable cost and payment clause included there. If it's been flowed down to you from the prime, then you do need to prepare an ICS as well. So why is an ICS significant? So finalizing direct rates from the ICS provide for timely settlement of cost under cost reimbursable and time and material contracts. And the establishment of final rates shall be used for contract closeouts, and it speeds up the closeout procedure. The ICS is the contractor's final opportunity to exclude any unallowable costs before the audit. So if you know that you might have some unallowable costs, it's a good opportunity to go ahead and exclude them before submitting the ICS to DCAA for audit. It also gives you an opportunity to adjust provisional or interim billing rates as necessary to establish the final indirect cost rates after the year end. Final indirect cost rates are also used in negotiating the final price of federal contracts and in other situations requiring the indirect costs where you need to settle those costs prior to the contract price being established. And ICS can provide a basis, historical basis for determination of final rates, and which can be used for forecasting provisional rates. Contractors must update their billing on all contracts to reflect the final indirect cost rates and update the schedule of cumulative direct and indirect costs following 60 days after the settling of final rates. That's the requirement again from 452 to 16-7. So some other considerations for why ICS is significant. Concluding the audit of an ICS, the contractor and contracting officer will execute a written understanding specifying the terms and finalization of indirect rates. And this will include the agreed upon actual rates. It will also show the basis that they apply to, will show the period that they cover, and any specific indirect cost items related to direct costs in the settlement. And the affected contracts and subcontracts will also be identified. The written agreement does not change any monetary ceiling, so this is important to note. So if you have a ceiling on a contract, any kind of agreements with the contracting officer regarding your ICS will not change that ceiling or the contract obligation or any specific cost, allowance, or disallowance that's specific to the contract. Moving on to the timeline and submission. As I mentioned, the submission is due 6 months after the contractor's fiscal year end. So as I mentioned, for a lot of people, that's June 30th. We see a lot of traffic in May and June. If it's a different date for you, you just calculate 60 months after your fiscal year ends. And what actually happens if you do not submit the ICS within 6 months? And most of the time, nothing will actually happen. You'll just get a letter from DCAA reminding you to submit one. You might not get the letter. So once the submission becomes 6 months overdue, this is when, and you haven't actually asked for an extension, this is when the DCAA auditor may provide the contracting officer with unilateral rate recommendation. And as a result, the contracting officer can take that action and apply those rates. As you can imagine, those rates are never beneficial to the contractor, so we always recommend that contractors follow up with their ICS and make sure you submit it on time, and if you cannot submit it on time, make sure you ask for an extension. So for delinquent ICS results in rate recommendations, it will be based on either that decrement might be based either on decrement factor applied to indirect rates using relevant contractor historic data, or they can use a company-wide decrement factor based on question costs at high-risk contractors applied to total contract cost if there's no relevant historic data. And as I mentioned, these rates are never favorable, so you don't want to be in this situation. You just want to make sure you submit an ICS. The rate recommendation will apply to active contracts as well as physically complete contracts for the overdue fiscal year, and that's for those rates recommended by the contracting officer. Once you do actually submit your ICS, so what happens then? After the submission and the determination that it is adequate, so initially, once you submit it, the DCAA will check to make sure that all the required information is in there. And if it's there, then it will be determined adequate and it will move on to the audit stage. So once they receive that adequate submission, the cognizant field office of DCAA will initiate the incurred cost audit within 6 months after the receipt of an adequate proposal. So it also takes the DCAA some time to process them and get through the audit stage. They utilize the guidance that's posted here, and we'll send you the presentations, so you will have the access to this link. That's the post-year-end incurred audit program utilized by DCAA for their audits. During the course of the audit, the DCAA auditor shall discuss audit findings with the government contractor as they arise. So they will explain to you what findings they have. It's not like they just look through it and come up with their findings, and that's the end of the audit. The contractor is expected to provide timely feedback on these issues to ensure a prompt resolution of audit findings and facilitate an efficient and effective audit process. There will also be an exit conference where all the issues found will be summarized, and any resolution identified during the audit process when significant audit findings are found. The contractor will also be given a final opportunity to respond to the audit findings and comments submitted by the contractor, and it will be included in the final audit report. The DCAA audit office provides the final report to the contracting officer for establishing the final indirect costs and billing rates. Then the contracting officer might provide the government contractor an opportunity to personally address and the results of the audit reported during the negotiation. During the negotiations, the contractor's position and supporting documentation is presented and considered prior to the contracting officer issuing the final decision regarding question costs and final indirect cost rates. Within 120 days or longer, if approved in writing by the contracting officer, after settlement of the final annual indirect cost rates for all years of a physically complete contract, the contractor must submit a completed invoice or voucher reflecting the settlement amount and rates. And this is called the ICS true-up process. So some of the things that DCAA is looking for in your ICS, as I mentioned, they will check to make sure that it's an adequate submission, meaning it contains all required information. They prefer that you use an ICE model, the one that they provide on their website, or something that's similar in format, containing all of the required schedules. Another thing they will check, they will make sure that the Schedule N is signed by the authorized party, which is usually CFO or CEO. A contractor submission of all claim costs incurred for cost type and T&M reimbursable government contracts, including adjustments and explanatory notes. So you will be given that opportunity. As I mentioned, this is your chance to exclude any unallowable costs. So you'll have the opportunity to do that. And if you do choose to do that, you'll need to include the notes explaining why. They also check for the identification of unallowable costs. This relates to the point earlier. Just make sure that you exclude them and you make notes about why you excluded them. Another important piece of information to include in your ICS that you make sure you identify the contracts which are subject to penalty, which is 452.542-3, penalty for unallowable costs. You must identify them on your ICS, showing which contracts are subject to it. And another important point for DCAA to check for, they will make sure that the costs are reasonable, allocable, and allowable in accordance with GAAP, FAR, contract provisions, or CAS if you are CAS covered. They will also check for certain trigger counts to identify any unallowable costs. And when I say trigger counts, every auditor has their own methods in identifying those, but some of the things that might lead to that would be if you change your indirect cost rate structure compared to last year, they'll spend more time scrutinizing what has changed and just spend generally more time reviewing the ICS. They'll also compare your ICS to the prior year. So even if you did not change the rate structure, but if there is a significant change in your pools and base amounts, they will also look through that to determine the cause of that. They'll look at any new accounts. They'll also use any findings from prior years. So if you had any findings last year, they will make sure to check for the same issues this year. If they had any audit leaks, and they might also use fraud risk indicators in searching for those higher risk accounts. They also can use the audit history or experience with that particular company. And as I mentioned, auditor judgment, they might have their own ways of identifying higher risk accounts that they will look more closer at. Going into the preparation techniques and best practices, so we'll go through briefly some of the schedules that are included in the ICS, and then we'll spend more time going through each individual one, spending more time on what is required and what information is required to be included in each of the schedules. So as I mentioned, the ICE model, the purpose of the ICE model that DCAA provides is to assist contractors in meeting its requirements for submitting an adequate final indirect cost rate proposal as required by FAR. Some of the benefits of ICE model are that it's already pre-built and all of the required schedules are included in there. If you have used it in the past, you might know that it's not the most user-friendly model. So though it is preferred, it is not required. So if you have a model that works for you and you used it in the past, you can go ahead and use it. Just make sure that it includes all of the required information. Some other things to ensure that are included: make sure that there's a company name and fiscal period on every single schedule of an ICS. And a separate schedule needs to be prepared for each final and intermediate indirect expense pool. So if pool costs accumulated by department expenses should be identified within each pool. DCAA also prefers that you include an index or table of content just to show them which schedules are included. It's always a good idea to still include all of the required schedules, and if they don't apply to you, you can just make a note there. Just a quick note on the ICE model. It will only have one type of schedule depending on the type of cost. So for example, it will only include one G&A, one overhead tab. If you do have multiple G&As and multiple overheads, you will need to add those schedules. So looking closer at the actual schedules and what is required and what is supplemental. So the required schedules, just as it sounds, they are required to be completed at the time of submission if they're applicable. Some schedules, while identified as required, do not have to be completed if the schedule does not apply to a company. So for example, capital cost of money, I've rarely seen this one, even though it's required. If it does not apply to your company, you don't need to prepare it. Supplemental schedules, additional schedules which are not required to be provided at the time of submission for the determination of an adequate submission. However, they may be required during the audit process. They can be requested to be provided at the entrance conference to help determine audit risk and preliminary and field audit steps. And federal contractors should consider completing and including the supplemental schedules at the time of submission to decrease delays in facilitating the audit. So even though they are not required, there's a couple that we recommend that you still include if you can, and we'll spend more time looking through each individual schedule in a second. So the required schedules. An adequate indirect cost rate proposal shall include the following data unless they do not apply to you or unless specified by cognizant federal agency. So Schedule A, that's just a summary of all claim indirect rates, expenses, and rates. Schedule B, it's G&A expenses. As I mentioned, if you have multiple, you'll need to include a couple of them. Schedule C, overhead expenses. Schedule D, these are your intermediate and occupancy expenses, such as facility, service centers, a home office. Schedule E is a claim allocation basis by element of cost used to distribute indirect costs. Fringe, this is the schedule of fringe benefits expenses. While this is technically not one of the required schedules, it is usually recommended to include it just for the ease of audit, and it will make finalizing ICS much easier if you have a separate schedule for it. And Schedule F, this is the facilities capital cost of money. As I mentioned, if it does not apply to you, you don't need to prepare it. Continuing with the required schedules, some of these are very short schedules. So Schedule G is the reconciliation of books of account and claim direct cost by major cost element. Schedule H, one of the two most important schedules, as I consider them, H and I. So Schedule H is a schedule of direct cost by contract, subcontract, and indirect expense applied to those costs. Schedule A is the cumulative direct and indirect cost claim by billed by contract and subcontract. Schedule J is a subcontract information, and Schedule K is a summary of time and material and labor hours contracts, including labor categories, labor rates, hours, direct materials, and other direct costs. Under Schedule, Schedule L, that's the reconciliation of your total payroll per IRS Form 941 to your total labor distribution. Schedule M, that's a listing of any significant changes, accounting changes in your organization in the last year. Schedule N, the Certificate of Final and Direct Costs, which is signed by your CFO. And Schedule O is the contract closing information for contracts completed in that fiscal year. So diving deeper into each of the schedules, we'll go through them in detail just to see what's required and some of the best practices for preparation of these schedules. So Schedule B, that's your G&A cost broken down by account name and number. You want to list all of your G&A costs that come from your chart of accounts first, and then if you have any intermediate allocations from service center or fringe, you will list them slightly below. B&P costs will be also broken down separately into labor, fringe, overhead, and ODCs, and then you'll present the total expense full amount. Any unallowable costs should be deducted out in the adjustment column. That's that column where I mentioned you'll have a chance to exclude any unallowable costs. And if you do that, please make sure to add a note and explain why that was excluded. Some of the good practices, you also will want to include the reference for any information that's linked on the schedule. So if you're bringing in any B&P labor from Schedule H, you will want to include that reference so it's easy to see where the information is coming from. So Schedule C is somewhat similar in presentation to Schedule B. Schedule C lists all of your overhead expenses. And if you do have more than one, as I mentioned, you'll need to prepare multiple Schedule C for each of your overhead. And just like Schedule B, you will list all of the expenses by element of cost and as identified in accounting records for each final indirect cost pool. It will calculate the overhead expenses, those costs that are closely associated with contract performance, such as support functions for direct labor or subcontractors. And the schedule will include details of costs by account name and number before intermediate allocations. As I mentioned, you will have one schedule per overhead pool. So if you have manufacturing, engineering, or on-site, off-site, make sure to have a separate tab for each of those. And any intermediate allocation amounts from service centers and fringe, make sure to list those as well and provide a reference to where the information is coming from. Continue with the key schedules, the required schedules. Schedule D is an intermediate pool containing costs that are not specifically associated with any one pool. Some of the examples include home office expenses, service centers, fringe benefits. These schedules are slightly different from the B and C we just looked at in a way that there's a table at the bottom that presents the allocation basis for that for that intermediate pool. So, for example, you will want to include the information for, if this is a fringe, the information for the base for that fringe, and provide the reference for where that information is coming from. So this is another example of Schedule D with actual numbers, just presenting some of those points that I mentioned. So you will want to make sure that after your allocation, you completed the allocation amount actually ties to your total base amount, and the claimed cost amount ties to the allocated amount. You'll also want to present a reference to where those allocated fringe amounts are going to. so it's easy to identify that these are the source of the fringe allocations, and also on the other schedules where they will come in, you'll want to reference that they came from this schedule. Schedule E is a summary of all of your allocation basis for your final indirect pools. So here you will present all of your indirect rates and link them to the schedules that provide the pool information. So you'll just have a total pool amount on the schedule, but then once you get to the base information, you will want to list all of the base amounts by cost element. And just like other schedules, you want to make sure that this is linked throughout the ICS. So all of your base information will probably be linked to Schedule H and a couple of other schedules. This is just an example of it, a short extract. So it just shows a fringe pool and G&A pool, but you will include all of your indirect rates in Schedule E. And another important point is that Schedule A, that's summary of all of your indirect rates that shows the pool, the base, and the rate. So the base amount will be coming in from this schedule for Schedule A. So in Schedule E, as I mentioned, it will the cost in each base should be broken down by line item and entered as a link to other inputs in the ICS, mostly as Schedule H. Schedule A will reference Schedule E. For base information, adjustments should be thoroughly explained with footnotes. No information should be hard-coded, and that's true for all of your ICS, not just for this schedule. You don't want to hard-code anything, because if you change anything, you want the model to be dynamic, so you want it to update automatically. The allocation basis for intermediate pools sometimes incorporated as well. This is not required, but is permissible if you want to include them. And some of the examples of the allocation basis include, for G&A, it's total cost input or value added, which is total cost input less direct subcontracts and direct materials. Subcontracts and material handling, the typical base would be the direct subcontracts and direct materials. For overhead, it's either direct labor and fringe plus B&P, IR&D and D labor, and B&P and IR&D fringe. For fringe, it's either total labor, FTE or headcount, and for facilities, square footage or headcount. These are just examples, and if you have other bases for your indirect rates, that's completely permissible as long as they are reasonable. Another point that I mentioned earlier, not only you will show your pool information and your base information, you'll also want to describe what your base is. So for example, in this example, we have fringe cost base is total labor dollars, or G&A base is total direct and indirect costs, except G&A material and subcontractors costs. So you will want to describe them and make sure that they actually tie to what you're presenting in your G&A base or your fringe base. So Schedule F, facilities cost, capital cost of money. This is one of those schedules that I mentioned that is required, but I have not seen it often. It seems to be one of the older schedules that is going away. So if it does not apply to your company, you don't have to include it. And what I would just mention, make sure in your table of content that you put a note next to it saying that it does not apply. So DCAA knows that you didn't just skip it, that you looked into it and did not include it because it did not apply. So Schedule H, this is one of those schedules that provides the basis for a large portion of your incurred cost submission, and it calculates actual incurred costs by contract broken out by contract type and element of cost. So your project status reports or detailed project ledgers will be used as a source of information to compile the direct cost portion of the Schedule H. And indirect rates as calculated in Schedule A. So all of those schedules that we just went through, where you calculated G&A, overhead, fringe, and any other rates that are now summarized in your Schedule A, you will be bringing in those rates to Schedule H, so you can calculate the actual indirect cost applied to each of the contracts. It's important to note that only flexibly priced federal awards are required to be separately identified on Schedule H, so at billing level. So if you are billing at the, let's say at the CLIN level, you will want to break down your contracts by CLIN on Schedule H. Commercial or any other federal and non-federal contracts, you can just present them as a lump sum. They still need to be there so that the Schedule H can reconcile to your total trial balance, but you don't need to break them down by contract. Some of the best practices for Schedule H, you'll want to include federal agency and customer name by contract or by award. You will want to differentiate between claimed and unclaimed non-billable direct costs by cost element and apply direct and indirect costs. You might want to include a column which totals both claimed and unclaimed amounts by cost element. Reconcile total costs incurred on Schedule H to trial balance or detailed general ledger. So this is something I mentioned. We'll get into the reconciliations closer to the end of the webinar, but that's one of the important checks. You want to make sure that all of your costs presented on Schedule H reconcile to a trial balance. You'll also include attributes of client accounting structure, such as project codes. If you use any kind of internal project numbers, this is good information to include on Schedule H, so it's easy to reconcile if you need to track down any variances. You also calculate indirect rate caps on the schedule. While it's not required to do on Schedule H, it's a good practice if you do have any caps. So it will make it much easier and more efficient for you to link it to Schedule I if you calculate it on Schedule H. And as I mentioned, you can use a commercial plug to save time for any commercial contracts or any federal contracts that are not flexible priced. You can just include one line item for them. So this is looking closer at the actual Schedule H. And some of that information I was mentioning just a second ago that you might want to consider including, such as prime and sub contract numbers, must be included on Schedule H and be consistent across all of your schedules, so such as H, I, J, and K. You want to prepare it at the billing level. If you're billing the CLIN level, include all the CLINs. If you have any other structure for billing, that's how Schedule A should be presented. And you might want to include the customer name, federal agency by award as well. That makes it easier for DCAA to audit it. So Schedules B through E and reconciliation them to H. As I was mentioning before, you will want to link all of the information in your ICS between schedules. You don't want to hard code anything. This is just an example. On the right-hand side, you see Schedule H, and then on the left-hand side, we have Schedule C. As you can see, you will want to make sure that the rate developed on Schedule C actually matches the rate on Schedule H, and that the total overhead amount calculated on Schedule H ties to the overhead pool calculated on Schedule C. Schedule K is one of those schedules that you prepare only for time and material contracts. Here you will ensure that time and material rates are current and be aware of potential mid-year rate changes. So if your rate change sometimes during the year, you'll need to present both rates for use in that year. And materials and travel costs, if you had any on those contracts, will also be included here, and they will be burdened with T&A rate if applicable. And for each contract, the total cost and task ceilings should be included as well. And you'll also use this information from Schedule K to populate your time and material information on Schedule I, which we'll get to in a second. This is another closer example of Schedule K. Just like all other schedules, make sure that it's presented at the billing level and that all contracts that are identified as time and material on Schedule H have to be included on Schedule K. And as I mentioned, ODC and travel costs should also tie to Schedule H. So Schedule I, one of those two important schedules, I and H, that probably takes the most time to prepare. Schedule I determines the cost claimed versus those billed for federal cost reimbursable contracts and T&M contracts. All cost reimbursement and T&M contracts are identified separately on this schedule and should be sorted by federal agency that awarded them. And information on Schedule I should be presented at the billing level, just like all other schedules. Some of the important things to consider when you're preparing Schedule I, current year claim costs are linked from Schedule H and Schedule K for time and material contracts. And you need to add any prior year settle and claim costs. You'll have a separate column for each fiscal year, so the prior year costs will have to be included there as well. Just as I mentioned earlier, make sure that you link everything and don't hard code anything in the schedule. Bill costs are determined from the final invoice of the contractor's fiscal year and should be the cumulative billing figure for that award. The intent of Schedule I is to calculate the total over or under billing on federal awards. And a few other considerations, contract limitations, rebates, and credits column is presented there, and it should be used for adjustments to claim costs such as excess costs above contract ceilings, unallowable costs per contract terms, or costs incurred outside of the period of performance. Net cumulative settled or claim column should not exceed the total contract ceiling. And you might want to indicate whether awards are physically complete, and this will make your reconciliation to Schedule O much easier. And as a rule, any contracts identified physically complete on I must be presented on Schedule O. And cumulative billings should identify fee amounts where appropriate and not include these amounts in over and under billing column. So this is a closer look at the actual Schedule I. As I mentioned, the current year costs will come either from Schedule H or Schedule K for T&M contracts. Contracts identified as physically complete will be reported in Schedule O. Contracts subject to penalty provision also must be identified. So here on the right-hand side, we have either yes or no for those contracts. Prior fiscal year costs should also be included here as well. And this is an important point. You need to make sure that the costs that you're presenting here for prior years are actually tying to your prior year's ICS. Especially for those multi-year audits that DCAA is doing now, it will be very easy for them to spot if there are any variances in the fiscal years from one model to the other. So cumulative billed costs should exclude fee amounts from cost type contracts, and inclusion of contract limitations to prevent overstating claim costs should also be presented here. Schedule J is a subcontract under any time and material or other cost reimbursement type contracts. The intent is to provide identification of subcontracts you have awarded to companies for which you are the prime or upper tier contractor, including any interdivisional efforts. The information here will have to include the subcontract number, prime contract number, subcontractor name and address, sub point of contact, total value of the subcontract, and cost incurred in that fiscal year, and as well as the work type. And cost incurred on Schedule H must agree with the amount provided on Schedule J. So subcontract the cost that you present on Schedule H, the total amount should tie to what you're presenting here on Schedule J. This is an example of a Schedule H. A few important things to include here. Period of performance and subcontract number must be included. It should be inclusive of all subcontracts awarded to flexibly priced contracts, and you need to break it down by each subcontract. Best practice, even if it's not a flexibly priced contract, the subcontract, you might still want to include it here, just to make sure that it reconciles to Schedule H. You don't need to break them down into individual contracts, just present them as a lump sum at the bottom. A few other important schedules. Schedule L, which is the reconciliation of total payroll to total labor distribution. Here we're just making sure that the total labor expense reconciles to IRS Form 941. And the payroll information should be entered directly from the Form 941, and labor distribution information is entered using links from Schedule H for your direct labor, or Schedule B and C and D for indirect labor expenses. Total 941 amount should reconcile to your labor costs from the ICS. It is allowed that there is a small variance there between 1% and 2% is typically considered immaterial. Schedule O, this is the schedule where you'll present your contract's closing information. You will use only the contracts that are physically completed in the fiscal year of the ICS, and will include the following information on each closed contract broken out by contract type, which has such thing as contract number, performance period, whether or not it's ready to close, contract ceiling amount, contract fee, level of effort, cumulative hours, actual and required. And this is an example of an actual Schedule L. At the top of the schedule, we have all of the labor information presented, which will link to individual schedules that I mentioned. So in addition to linking them to those schedules, you'll want to provide a reference, make sure you tell DCAA where it's coming from. And at the bottom of the schedule, you will enter the information directly from Form 941. And as I mentioned, there will be a small variance here. It's typically really hard to reconcile it to zero. And if it's within 1% to 2%, DCAA typically considers it immaterial. This is an example of an actual schedule. As you can see at the bottom, there's slight variance, as I mentioned. The top section provides the salary and wages information, and the bottom section is Form 941. Schedule O, this is where you will list all of those contracts that are closed. This is just a model for that contract, for that schedule, and this is an actual Schedule O with some of the sample information in here. So contracts identified as physically complete on Schedule I are reported on Schedule O. You'll need to make sure that those two schedules reconcile. And Schedule O should contain the level of effort information if required. If it's not required, make sure to put a note there. and period of performance and ceiling information should also be included there. So these are some of the supplemental schedules. As I mentioned, they are not required and you don't have to include them. You might be asked to prepare them at the time of audit. So it might be a good idea to prepare at least some of them. I've never seen all of them included in ICS, but some of the more common ones I'll identify. So Supplemental Schedule A is a comparative analysis of indirect expense pools detailed by account with prior year and budgetary data. Supplemental B, general organization and executive compensation information. So this is one of those supplemental schedules that are good to include just to provide you a chance to calculate some of the adjustments that you might need to do on the executive compensation information. And it will make the auditing process much easier if it's already prepared. Supplemental C, it's identification of prime contracts under which the contractor performs as a subcontractor. Supplemental D, description of accounting system. Supplemental E is the procedures for identifying and excluding unallowable costs. Supplemental F, certified financial statements and other financial data. Supplemental G is management letter from outside CPA firm. And Supplemental H is actions that have been or will be implemented to correct the weaknesses described in the management letter from Schedule G before. A few more supplemental schedules. Supplemental I lists all of the internal audit reports issued since the last disclosure of internal audit report. Supplemental J is annual internal audit plan of scheduled audits to be performed in the fiscal year. Supplemental K is a federal and state income tax. Supplemental L, Securities and Exchange Commission 10K annual report if it applies to you. Supplemental M is minutes from Board of Directors meeting. And Supplemental N is listing of delay claims and termination claims submitted which contain costs related to this subject fiscal year. And Supplemental O, that's another one of those supplemental schedules which is very useful to include. These are contract briefings which generally include a synopsis of all information contract provisions. If you do prepare them, and I know sometimes the contract briefs are not always completed, so if you do have them and they are prepared, then go ahead and include them. And if you don't have them, this will probably require a significant level of effort. So you're not required to include them, but this best practice is usually good to have them prepared. And if they are ready, go ahead and include them in the ICS. As I mentioned earlier, throughout the ICS, you will want to make sure that all your schedules are linked, and the purpose is to make sure that they're all reconciling between one another and that you can reconcile the total amount to the trial balance. There are a few reconciliations that we recommend. This is one of the simpler ones. This is the reconciliation of the total cost per ICS to trial balance, and what you'll include here would be the total claim cost coming from Schedule H, also unbillable direct costs from Schedule H, and if you have any G&A adjustments coming from Schedule D, you will want to include them here as well, which will give you the total cost per an ICS. This is a very simple reconciliation. Depending on what your rate structure is and what your model is, it might look slightly different for you. And you will want to reconcile the total amount per ICS to the cost per trial balance. And there should not be any variances there. If there are any small variances and you know where they're coming from, you might include a note explaining what's causing those variances. But as a rule, there should not be any variances between trial balance and ICS. This is another reconciliation that we typically perform and recommend that our clients perform. These are all of your pool information, all of your base information, and all of your rates between Schedule A, Schedule E, Schedule H, and H1. All of those schedules need to reconcile and present the same information. This is why it's so important to link all of these different rates and not hard code anything. There should not be any variances here. If you see any variances pop up, you'll need to investigate and see where they're coming from. This is another trial balance to an ICS reconciliation, which is more detailed than the one we looked at just a few seconds ago. Here you will want to present your trial balance by account, and then each of your schedules listed with corresponding counts and the amounts, including those schedules. And again, there shouldn't be any variance here, and if you do have any small variances, you can include the notes explaining where they're coming from. So DCAA has their own checklist that they use to determine the adequacy, and this is actually what's driving all of those reconciliations that we just looked at. This is just a small section of it. It's much longer. There's quite a few pages there. But if you want to follow this checklist, it will basically walk you step by step and ask you questions such as, does your Schedule B reconcile to Schedule A? And if you follow all of those reconciliations that I was just talking about, it will take you through most of the checklist items. There are a few that are not numbers related, such as make sure the Schedule N is signed. This is what DCAA is using for their adequacy, and this is also good to use as a preparation tool for your ICS review. Unallowable costs, as I was talking earlier about ICS as contractors' last opportunity to exclude any of the unallowable costs, and why is it important to make sure that you're not including any unallowable costs. And the reason is that there are some significant penalties that come with including those costs. So you will want to review it closely and make sure that you don't have any unallowable costs for Part 31 included in your ICS. And some of the examples include express unallowable costs. We have an example here on alcohol. I'm sure everybody is aware of it. Cost with limitations, mutually agreed to be unallowable costs for contract terms, or any directly associated costs should not be claimed as indirect costs. If a cost is not specifically identified in FAR 31 as unallowable, it could still be unallowable if it does not meet one of the allowability criteria, such as if it's not reasonable or allocable, if it does not comply with contract terms, if it's not GAAP or CAS compliant for CAS covered contractors, and if it's not adequately supported. Some of the penalties that might be applied to unallowable costs in billings or claims, it could be disallowance of the cost plus the amount equal to those costs. Could be interest on any paid portion, if any, of those disallowed costs. And if the indirect cost was determined to be unallowable for the contractor prior to the submission of an ICS, the penalty could be as high as twice the disallowed amount. And the unallowable costs do not have to be paid in order for the penalty to be assessed on them. So make sure you review your ICS closely, and if there are any costs that you think might be questioned and you will not be able to support them as allowable costs, it's a good idea to exclude them at the time of the ICS. So some of the key takeaways from the best practices section. So the purpose of the ICS is to establish the final annual indirect cost rates and determine over and under billing. And keep in mind the timeline. It is required to be submitted within 6 months after the fiscal year end. Schedules B, E, and H where the most common errors occur, and this is where we spend and our clients spend most of the time reviewing that information. You'll want to scrub the unallowable activity from high-risk accounts. Those are those trigger accounts that we talked about, and ensure proper documentation is maintained for costs incurred. This is an important point because even though your costs are reasonable, allowable, allocable, if you don't have proper documentation, the DCAA might question them and disallow them. And you also want to use the salary surveys to the maximum extent practicable to support your salary costs. And we'll go into that a little bit later in the audit trends, but you'll basically need to make sure that your salaries are reasonable and comparable to the market. You'll also want to ensure an unallowable overhead expenses are included in your G&A base, so they're still getting burdened with your G&A costs. And perform the reconciliation, which I cannot stress enough that you'll need to make sure that the entire ICS reconciles between different schedules and to your trial balance. So 2018 report to Congress from DCAA is coming soon. They're taking their time and in processing it. So in a second, we will look into the audit trends and some of the information that we get from that DCAA report gives us an insight into what the current auditing landscaping is. So as I mentioned, 2018 report from DCAA is currently not available. Usually it comes out by the end of March. We've all been very patiently waiting for it, but it's not out yet. So our information is based on 2017 report that's currently out. The DCAA wants your submissions on time, but currently they are behind on providing their own report. So some of the trends that we've noticed from that report, an example is consultant costs. We see a higher scrutiny of the consultant costs. We've had a client where they had a subcontracting agreement with their consultants and describing what type of work they will be performing, but the invoices received from those consultants did not contain any information as to what type of work was performed. It just had the name of the company and the amounts, and DCAA determined that that was not the sufficient support for those costs, and they disallowed all those costs. So going back to my point about making sure that you have the support for all of your costs is very important because it could be disallowed simply because the support is not adequate. Executive compensation, this is again what I was just saying a second ago about the surveys that companies perform to support their executive compensation and just in general salaries within the company. You'll want to ensure that your HR department has a standard process for developing compensation bands. It has to be written compensation plan or policy, and you'll want to utilize salary surveys to the extent practicable. Here are a couple of examples: Towers Watson, ERI, Mercer. You don't have to use these are just examples, but you'll want to make sure that you document the substance based on what your salaries are paid, because we see a higher rate of disallowing, especially executive compensation, determining it not being reasonable. Right now, the executive compensation is $540,000 for fiscal year 2019. Based on this number updates yearly based on the Bureau of Labor Statistics, so it will be going up every year. And similar for executive compensation bonuses, a good practice is make sure you have the policy documented so you know what it is, and it's easy to show as a support for any bonuses paid. Also a good place is an employment agreement, which could outline those potential bonuses. So continuing with the audit trends, what we're seeing now is that medium and small contractors receive more attention from DCAA. We also see quicker contract closeouts, so contracting officers can avoid negotiation and go straight to closing out contracts using rates established by DCAA. We also see the continued use of multi-year audits, which are less favorable to contractors. Commercially accepted standards for risk and materiality provide both qualitative and quantitative considerations, and auditors are encouraged to discuss qualitative and qualitative materiality considerations with contracting officers and other government customers. Statute of limitation is 6 years for 433.206. DCMA may establish rates with the option of unilateral cost decrement, and the current rate updated for 2016 is 16.4%. And I'm showing you the rate for 2016 because that's the most current one that we have. So as I mentioned, all this information is based on 2017 report to Congress, and as soon as DCAA presents their 2018, hopefully we'll get more insight in what's going on this year. So incurred cost audit continued to be a top priority in that year, and DCAA is expected to be fully compliant with Congress mandate that the audit backlog inventory must not exceed 1 year. They're planning to get there by 2020. As you can see from this table below, DCAA examined nearly $281 billion in defense contracting costs, and most of that came from incurred cost submission. Some of them was forward pricing and special audits, but incurred cost submission continues to be their top priority. Right now, it's taking DCAA about 143 days from the time an ICS audit starts to the time that audit report is issued. Just like in prior years, major contractors made up a significant proportion of examined incurred costs. In that year, only 2,860 incurred cost audits were backlogged as of 2017, and as I mentioned, they do plan to be compliant with no backlog requirement by 2020, but they are supposed to be on track for that for 2018. So that will be interesting to see where they are with that once the final report comes out for last year. And with that, I'm going to turn this over to Kim to tell us more about the Unanet and the ICS preparation. Thank you very much for everybody who's joined.
Wow, thank you. That was absolutely awesome. Thank you for doing that for us, and everybody. I'm sure everybody on the phone learned a lot. So let me talk to you for just a few minutes about Unanet, because the accounting, the timekeeping, and the expense solution that you use really does have a bearing on the success you're going to have with your overall compliance, both today and in the future. And it's going to set the stage for your company's success when you're under audit. So Unanet's integrated real-time project-based ERP in conjunction with policies, procedures, practices, and qualified personnel, it's going to ensure that you can meet the requirements of the government's regulations and satisfy DCAA's demands for data and information when it's time for an audit. So Unanet has reports and information that will help you automatically complete a lot of the schedules that Tetiana was talking about today. And so that makes it easy to prepare for the audit, and it's going to ensure your data quality. So let me spend just a second going through what Unanet actually does, because it truly does make the project lifecycle come alive. So from the plan perspective, you're able to budget and plan your work, your resources, and your purchases, really starting back in the proposal phase. And that's going to really give you a great look into your total pipeline. And then you're able to execute the project. So from the proposal, you're able to do one click and turn that contract that you just won into an active project. So time collection and expenses are also captured in this phase, as well as all of your forecasting. Now, from a monitoring perspective, you're able to see real-time status in Unanet for your project and for all the financial information. There's dashboards and reports that give you that information delivered, again, directly to your laptop or to your iPad, and it'll let you make those informed business decisions. From an invoice perspective, with time and expense, it's directly integrated. There's no time delay to get billings out quickly, so you're able to maximize your cash flow. And our tool enables both GAAP and DCAA compliance. And then with Unanet, it has a full general ledger package, so accounts receivable, accounts payable, and it really is a big differentiator for all project stakeholders, is they can really see the complete picture. So Unanet, it really is that one tool to manage your business and all of the projects that make your business up. It's battle tested by DCAA. And if you'd like to learn more about Unanet and how we can help you prepare for your cost incurred audit, please join at one of our upcoming product demonstrations, or please feel free to contact either Tetiana or myself. And Tetiana, if you'll just roll to the next slide. Here's Tetiana's email, and my email is kkoster@unanet.com. And so we really thank you all for joining us. Again, thank you, Tetiana. And we've got a lot of questions in the panel, and Tetiana and I will be answering those questions to you very soon, probably within the next 24 hours. All right? So thank you again for joining us, and thanks again, Tetiana.
Thank you.